On April 29, 2020, Nongfu Spring Co. Ltd. filed an IPO application with the Hong Kong Stock Exchange. Remarkably, Nongfu Spring, much like Huawei and Laogan, was previously viewed by the public as a corporate titan staunchly averse to going public. Zhong ShanShan even declared in June 2017 that the company had no current need to enter the stock market, given the capital market's demand dynamics. Yet, in a surprising shift, Nongfu Spring willingly sought out the opportunities of the capital market, catching many observers off guard. Some experts suggest that for most firms, going public is seen as a chance to tap into the potent fundraising potential of the capital market. For Nongfu Spring, the IPO was likely less about financial gain and more about mitigating the intensifying competitive pressures in the food and beverage sector. Nongfu Spring isn't struggling for cash. The company disclosed impressive revenues over 17 billion yuan each year from 2017 to 2019, with growth rates above 17%. Since 2012, Nongfu Spring has dominated the Chinese packaged water market. Nongfu Spring unveiled its listing plan on August 25, 2020, with China International Capital Corporation and Morgan Stanley serving as co-sponsors, anticipating raising about 7.77 billion Hong Kong dollars. The IPO was met with an enthusiastic response, with subscriptions from various brokers pouring in. By the afternoon, the offering was oversubscribed by 26 times, with brokerage financing reaching 15.9 billion Hong Kong dollars. This investment frenzy ignited the excitement of spectators, who are often more eager to delve into the subtle complexities behind the financial spectacle. As Nongfu Spring proceeded with its IPO, it became clear that the company was akin to the Maotai of the water industry, producing more profit per liter than oil. Its prospectus revealed staggering gross margins across its product lines, with bottled water making roughly a 60% margin. Indeed, the bottled water industry is widely acknowledged for its lucrative profit margins. The simplicity of its raw materials keeps production costs low. Conveniently, several of Nongfu Spring's sources are strategically positioned near major consumption hubs, allowing for production and sales to occur closely, massively reducing transport costs. The principal cost in Nongfu Spring's ledger is the PET bottle, with PET accounting for 31.6% of total expenses. Prior to its IPO, though, Nongfu Spring's strategic maneuver entailed distributing nearly all its earnings. On September 8, 2020, Nongfu Spring debuted on the Hong Kong Stock Exchange. That day, Zhong ShanShan unexpectedly found himself a Weibo sensation. Actually, Nongfu Spring isn't the first venture Zhong ShanShan has taken public. Unlike the early buzz around Nongfu Spring, Zhong's stance in biopharmaceuticals is more akin to the unassuming work of a humble monk. This 5-year dedication resembled a gambler's all-in, finally culminating in the vaccine candidate Sekulin in 2007. Wantai's listing on the Shanghai Stock Exchange on April 29, 2020, witnessed a soaring market response, with a share price starting at 8.75 yuan. Yet some skeptics pointed out Wantai's heavy reliance on Xiamen University. As per Bloomberg Billionaires Index, Zhong's ascent in wealth surpassed not only tech moguls Pony Ma and Jack Ma. It's rumored that Zhong ShanShan's prized possession is a ceramic figure of Don Quixote. After ascending to the status of the wealthiest, Zhong opted for a strategic withdrawal. Over the years, he followed his meticulous strategy to build an impressive business landscape. But he likely still holds the early advice he gave himself in a personal letter. Money, just money, is not enough. I aim much higher. From an earthly viewpoint, he amassed wealth enough to rival kings, possibly reaching what many would deem the pinnacle of success.